Hey guys, Czar here, back with you. Hope all is well. Trust you're having a good day. Watching closely here. Just thinking here, guys. Okay, buy stop order right there, guys. Stop below this big shift candle. And I'm in, just like that. I am in long the NASDAQ, guys. After being short and taking a 1-hour charge this morning, it was a break and a retest. It's a trade I would take 7 days a week. Just didn't work out today. But now that we have resolved above the open range, had a nice break and retest, right? The inverse of what we had here. I'm doing this again, but now on the long side. And I'll explain more of the reasoning behind it in a moment. And target 1 has been hit, guys, and so the 1-hour all-or-nothing trader has left the game with full profits, and the 2-hour move stop to break even at 1 hour has moved their stop to break even because we hit 1 hour. And now we wait and see what happens to the other players. All right, guys, in the meantime, why am I long here? Well, I'm long for a number of reasons from a structural standpoint that I'll get to in a moment. But I'm also long because I was short earlier this morning. It's the video beside this one, and it didn't work out. I took a beautiful break and retest of the open range with a very bearish configuration on the daily chart with a break below a bearish engulfing candle from yesterday, which is a super bearish sign in the context of a correcting market, right? So impulse down, corrective up into the 21, breakdown below on high volumes, by the way. That's a textbook distribution day in the big picture, a bearish measure. So when we have a nice bearish setup like the one that I took earlier and that I would take 7 days a week if the market was open, and it immediately fails with shift candles 1, 2 going in the other direction and breaking above and closing above the open range, all of a sudden that very obvious bearish posture must become bullish in the short term at the very least, and that's why I'm here. So we had another break and retest of the open range, but this time above the open range with a bullish resolution. And so that's why I'm long, guys. It's believing what the market is saying despite the obviousness of going the other way. This is also a principle, by the way, that I've known for almost 4 decades now in the asset management world, is that when we have a bear market, for instance, in swing trading and in long-term investing, in a bear market, prices will sell off over and over again. Every time there's bad news, the market will sell off and sell off and sell off. In other words, it will go lower, lower, lower. And all of a sudden, somewhere along that bear market life cycle, the market will stop going down on bad news. In fact, it will sometimes go up. And the moment you start to see that pattern develop, you better be loading up, because chances are the market's about to explode to the upside, or at least find a really solid base. Because when the pressure comes off the market and all of a sudden you get a couple of pieces of good news, that market is ready to go. And so this is a microcosm of that type of thing. When something is so obvious to go down and then it fails to, we need to take that indicator very seriously, at least on an intraday basis. And that's why I'm long this market. And target 2 has been hit, guys, and so the 1.5-hour all-or-nothing trader has now left the game as well with full profits. And there we have it, guys. All 4 models fully profitable. Just have to be a little patient, that's all. Thanks for being with me. Appreciate you. Have an amazing day. We'll talk soon.